Today's class is basically a continuation of yesterday's class. Someone to remind us what we did yesterday. Someone to remind us what we did yesterday. Someone to remind us what we did yesterday. Jolly Kagiri, kindly mute yourself. Mute your microphone. Let me try mute you from this end. Someone to remind us what we did yesterday. Slide.
We did fair gap value.
Pardon?
We did fair gap value.
Fair value gaps. You actually got fair value gaps, yes. Fair value gaps.
Fair value gap.
What else did we cover? Someone to
So we did that. Yeah. Okay.
Yes, fair value gaps. Another thing that we did yesterday. No one can remember that we did confluences. Confluences. I keep mentioning confluences because it's very important to have more than one POI that are merging with each other. But just to continue with whatever we've done yesterday, we're going to look at something we call a stop hunt. Then lastly, we shall close this off with a Quasimodo pattern and Quasimodo level. So let's start. A stop hunt refers to an event in time when a lot of traders' stop loss orders are triggered. So it does not matter if a trader is holding a long or short position, but stop hunting happens when majority of stop loss orders are executed. Then soon after this, the trend changes and price actually moves to the direction or in favor of the trader's prediction. If you can look at this picture right now, just to explain in simple terms what stop hunt is a situation where you've done your analysis, your technical analysis in that case, you've looked for your confluences. Basically, you've done everything in accordance to your trading strategy, and you've had your position like that, and you know that the market's supposed to go your direction, like your previous prediction. But what happens now? The market goes against you, or rather comes into your zone of your entry, triggers your entry, but starts to go against you. But immediately after stopping you out of that trade, it goes your direction all the way to your take profit. So we normally say are very painful because imagine immediately after stopping you out of that trade, it goes what? In your direction all the way to your take profit. It means if it did not tap you off of that, if it did not stop you out of that trade, you could be riding in profit. But what the market did, it actually stopped you out. Then immediately after stopping you out, it went into direction all the way to your take profit. And that is what we call a stop hunt. So it happens when you've opened a trade, after scanning the chart, seen a good trading opportunity, you have defined the stop and your take profit targets. So you are confidently sitting for the price to move in your direction. Basically, you've done everything you could to justify that trade. But suddenly, the market goes to your stop loss, knocks you out of that position before proceeding to move in your original direction. And no wonder we are saying a stop hunt is very painful. So let's look at situations of a stop hunt. A stop hunt in this situation, you can have A, B, C, and D. So we can explain them. Let's start with the situation B. Situation B, I want us to imagine, let me just draw this chart right here. Let me draw it. We are having support and resistance. we are having our support right there, our resistance rather in this case. We are having our resistance up there, then you're having our support down here. I'm just having a replica of what is in that example, our support right there. So what is happening is you're having a situation where the market is playing. The market is playing in between the support and the resistance zone, but you're having something like that. Then we are going down like that. Then we are going up like that. Like that. So this is basically what you can say a stop hand is. You know, what did we say we expect from the resistance zone? We expect the market not to break through, but down. We expect the market to go down. Let me repeat myself. So in the resistance zone, we expect that the market is not going to break through this resistance zone, but we expect to see a selling pressure from that zone. The same thing with the support zone. We expect from the support zone, the market will not go beyond the support zone, but will bounce off towards what? The resistance. So what is a stop hand? This is a very good example of a stop hand. We know, let's assume we know that the market, after the market tapping the support, the resistance zone, we expect the market to go down. So you're having your entry at that juncture like that, and expecting your support to be your take profit. So what happens now? The market comes inside to your entry, but immediately after goes all the way to your stop loss, and after stopping you out, you can see from this part, after stopping you out from that juncture, it actually goes in your direction all the way to your take profit. Now that you're saying it's very painful, you've done everything to justify this trade, you've looked for confluences, done your fundamental analysis and everything like that, but it goes to your entry, triggers you in, but immediately after stops you out, and after stopping you out, it goes directly to your take profit. So this part right here is what you call a stop hand. This one is what you call a stop hand. A stop hand. Stop hand. Let me name a stop hand. An SH. You can call it just an SH. Okay, a stop hand. Let me save it to make it easier when I'm drawing again. SH. Like that. A stop hand from that juncture. And I'll have an example with a bullish trend. This was a bearish. So with a bullish trend, from the support zone, we expect the market to buy. So what happens is you're having your entry at that juncture, your take profit all the way to your support zone like that, and your stop loss right there. But what happens? The market comes into your entry point, triggers you in, but immediately stops you out, taps your stop loss. So it stops you out of that trade, but later goes all the way to your take profit. So that's basically what you mean by a stop. And coming back to this, what I want us to explain. You've seen your support right here and your resistance down here. So your support level, you're having your entry at this point, but what happens? The market comes, you can see this part marked with yellow, comes, stops you out of that trade before going down in your direction. The same thing, your entry is as your support zone right here. So what the market does, pushes down, kidogo down, stops you out, triggers your stop loss, then immediately goes in your direction. If you can comfortably, or rather, if you have understood what a stop hand is, thumbs up. A stop hand. So, how does it occur? A stop hand occurs when traders or large market players intentionally drive the price of an asset to a level where these stop loss orders are clustered. So, by triggering these stop loss orders, again, downward movement in price, causing stop orders to execute and potentially leading to a cascade of selling. So, what they're saying is, remember, not a lot of guys or majority of know about support and resistance. So you can only imagine where they'll be having their stop loss orders just above the support and resistance. So remember, having the same knowledge at the same time, it means most traders are thinking the same. So because we all know support and resistance zone, you don't expect the market to push above this resistance zone and don't expect the support to be broken through. So what they'll do is they know a lot of stop loss orders are right here. So they'll intentionally drive the market up to stop you out, and it will lead to a cascade of selling. Please, you have a question. I can see your hand is up. Please, you have a question.
What if the entry is not triggered?
If the entry is not triggered, you will say it's different between the entry being triggered and you being stopped out. And the entry is triggered and you're being stopped out.
I don't
Yeah?
I don't it's all the same.
No, it's not the same. There's a difference between these two. Let me just show you. There's a difference between what you're seeing right now. What you're seeing right now, it means the market gave the zone of your entry. There's a difference between being triggered, being triggered, and an entry being missed. And I'll explain like this. So there's a difference between this one right here. This means the market came, triggered your entry. Remember, your entry is this zone, triggered your entry, and went all the way to your stop loss before going into your direction. So it means in this situation, it means you are triggered into that trade, it went all the way to your stop loss, and that means you are stopped out of that trade and you left that trade with a loss. So let me give an example right here. Let's say you're invested, your account size is $100, like that. So if you look at this part right here, Pius, can you see amount? Amount right here is
Yes.
90, right?
Yeah.
And amount right here is, can you see that? Let me zoom for you. Okay, the amount here is above here is 90. You can see that this part right here at the top,
Yeah.
and the bottom amount is,
It's
can you see it? 176.45. You can see that. If you can see that, thumbs up. 176.45. Only up you can see that. If you can see 176.45. Okay, perfect. So what this means is, uh, if your stop loss is triggered, your account, your amount that will remain in your account is $90. So you've gone a loss of how many dollars, please?
it will be 176 minus 90.
No, no. Let me do that again. Remember, our account size is $100. Okay.
Oh,
So here's the stop loss. You're being told if my stop loss is hit, my account will remain $90. So how much is my loss?
It's $10.
$10. $100 minus 90. And if I trigger my profit, the amount to be left in my account is 76.45. So how much profit am I in?
76.45.
Exactly. So that's the difference. If your entry is triggered and your stop loss is hit, then it means you've actually lost money in the market. But there's a difference with this. My entry has not been triggered. So what do you think the situation will be? Fuse? My entry has not been triggered. So I'm not in that trade. So nothing happens to the account. My $100 will remain to be $100. Okay.
Yeah.
Yes, so there's a difference between a missed and a trade that have been stopped out. And that's basically all about a stop hunt. So hunt usually is because of identifying a POI that is weak, a point of interest that is weak. So to avoid a stop hunt, always look for confluences. And I said confluences more than one POI that are aligning with your strategy. And with that, a stop hunt now gives back what we call a Quasimodo pattern. So let's understand what a Quasimodo pattern is. A Quasimodo pattern things: a stop hand and a market structure shift, or rather what we call a change of character. So its name was derived from a tool which has shoulders that are not at the same level. And this will be able to understand when once I do it. So let's go to an illustration. Let's look at what a Quasimodo pattern is. So we are having an uptrend like this, like that. Perfect. Then we are having maybe a downtrend. I want two scenarios. So someone to tell us what's the name of this part right here? That one, that one, that one, and lastly this one right here. Okay, let's do this one. Okay, let's start with this one. Someone to name us these parts. Joseph?
The top one, break of structure, the bottom one, change of character.
So this one is this one right here.
Change of character.
Yes, or what we call what? Another name for change of character?
Market structure shift.
Yes, a market structure shift. So this one is break of structure, and a break of structure. So we are being told that a Quasimodo pattern is a combination of a hand and a market structure shift. Stop hand and a market structure shift. Let's look for the stop hand in this scenario. This part right here, if you've seen how I've described a stop hand right here, you'll see it was like this. And this part right here is what we described as a stop hand. This one that I highlighted the direction. This is a half part right here. So if I'm to come to this picture, I'll explain how a stop hand occurs in that scenario. So if I'm to come to this part right here, you can easily spot the stop hand. This zone right here. This zone. If you can identify that similarity between the two, thumbs up. Let me just zoom in so that you can see that my images will not be the same, but I'm very sure you can see that. Yeah, you can see some thumbs up. So that's our stop hand right there. And you are having our change of character. Remember, we are being told that a stop hand is a combination of a break of combination of a stop hand and a change of character, or a market shift. So that justifies that this part right here, we can actually call this a stop hand. Instead of naming it as a break of structure, we can name it as like a stop hand. A stop hand, like that. So in that case, it becomes a stop hand and a change of character. So a combination of these two, this combination is what we call a Quasimodo pattern. A Quasimodo pattern. So let's look at the case of a downtrend before we even continue further. We are having our break of structure right here. Yes, we are having another break of structure and a change of character at this juncture. A change of character at this juncture. If you are to have a similarity with what we are describing right here, this was our stop hand. Our stop hand right here. This was our stop hand. So bearing that fact, we can come back to this and we can easily identify our stop hand right here. Our stop hand. So that means we can change this to what? A stop hand instead of a break of structure. We can have that as our stop hand. So a combination of a stop hand and a change of character. You see the notes. A combination of a stop hand and a change of character. What people call is then what we name as Quasimodo. A Quasimodo pattern. This part here is our Quasimodo pattern. So let's look at don't worry, you're gonna go to the chat and we'll be able to identify those. So I want to explain this. So let's start with this part here. Let's start with our uptrend right here. There are two two ways of trading a Quasimodo pattern. And we'll start with the most simple that we've done already. Remember, you're having a change of character, so the market has changed its direction from being an uptrend to being what? From being an uptrend to being a downtrend. So in this scenario, are you looking for a short position or a long position? Someone? Are you looking for a short position or a long position? Are you looking for a short position or a long position? Phil?
A long position.
A long position, right?
The market is yet to change direction.
It has already changed direction. It was an uptrend they had a change of character. If you define a change of character, please. And the market changes the direction from
Being bearish to bullish or the other way.
yes, or being bullish to bearish. Exactly. So it means the market has changed the direction from being an uptrend to a downtrend. And always remember, we always trade the trend. Do not go in a bearish market, look for a bullish setup. And do not go to a bullish market looking for a bearish setup. Rule number one is always trend the trade. If the market is an uptrend, look for a long position. If the market is a downtrend, look for a short position. In this case, to tell you, because you've had change of character, then the market is selling. So you're looking for a short position. You're looking for a short position to enter this market and go short. So let's do that. I've said there are two ways to trade a Quasimodo pattern. Let's start with the first one. Remember, we are having our last, let me actually reduce this so that we can start from zero. We build up this concept. So we are having our last green red. Remember, this is downtrend before a buy. Our last red candle before significant buy is what we call what? Our last red candle, let me have it in red. Our last red candle before significant buy is what we call what? Someone. Last red candle before
A bullish breaker block, order block.
yes, a bullish order block. Bullish order block. So this one right here is a bullish order block. So what do you expect from a bullish order block, guys? Let's buy or sell.
You expect a buy.
A buy, correct? A buy. Let me just name it bullish order block. This one is a bullish order block. So what we expect from the market to do is the market to come into the zone of a bullish order block and continue the uptrend because it's a bullish order block. We expect it to buy. But the market at this juncture has a trend change. So it has basically what just happened. So it has basically disrespected our bullish order block right there. So a disrespected bullish order block becomes what? Someone. A disrespected bullish order block becomes a what? Joseph?
Bearish BB.
Yes, a bearish breaker block. And from a bearish breaker block, what do you expect? Okari? Bearish
Short position.
a short position. Perfect. So what do we do? Now we have identified a bearish breaker block. So we expect the market from this juncture to come into the zone of a bearish breaker block and actually have a sell from that juncture. A sell. So what you'll do, you can have that as your entry. You can have that as your entry like that. 50%, 50% is right there. Stop loss, and you can trade that bearish breaker block. That's the first way to trade a Quasimodo pattern. But that's the fact that the ultimate sell will come from the Quasimodo level. The ultimate sell will come from the Quasimodo level. Remember, so far I've only discussed about the Quasimodo pattern, not the Quasimodo level. So what is the Quasimodo level? The Quasimodo level is any POI that is on this leg right here. This leg right here is what Quasimodo level. A Quasimodo level. So the alphabet cell will come from that part. So you can have the alphabet R from the bearish breaker block, but the alphabet cell will come from the Quasimodo level like that and have a sell off from that. So any other block you find from this zone, maybe a Wick or anything, any POI of that leg is what we call a Quasimodo level. So you can trade that also. The alphabet cell will come from that juncture right there, like that. So let's look for a bullish. Let's look in the situation for a bullish order block so that we can go to the chart and we can actually illustrate all this that we're talking about. Let me delete all this so that it can be easier and ready with this part right here. Sly, have a question.
Yes, so Quasimodo level is at the tip of the top hand.
Yes, at the tip of the stop. I'll show you the chart in a minute. You'll be able to see that. And I hope I find one actually. But anyway, so let's look at this. Higher. We're having this is a bullish Quasimodo. What you've got is a bearish Quasimodo. Let's look for a situation of a bullish Quasimodo. Right, we've identified our stopper and our change of character. So this zone right here is our Quasimodo pattern. Let me just delete all of this because already we've identified them. We have our Quasimodo pattern. So let's start from the start, like just like we did with the other one. Let me zoom out like that. So let's start from the top. We are having our last, let's assume this was like this. We are having our last green candle right here. Remember this stretch right here is a buy. This stretch right here is a buy before a significant sell right here. So the last green candle before significant sell is not what? Last green candle before sale. Last green candle before significant sale. Levy?
Bearish on the block.
Yes.
On the block.
Yes, perfect. A bearish order block. This one right here is a bearish order block. Where is that? Bearish order block. So what we expect the market to do, we expect the market to come into the zone of the bearish order block and continue the trend with the bearish trend. But what happens is this market actually disrespects that. So a disrespected bearish order block becomes what? A disrespected bearish order block becomes what? Someone. Let's actually have Levi. Levy, tell us. A disrespected bearish order block becomes what?
A bullish breaker block.
Yes, correct. A bullish breaker block. A bullish breaker block. Like that. So from a bullish breaker block, what do you expect to mean? Do you expect a buying pressure or a selling pressure from a bullish breaker block?
Just a question. Okay. So the same bearish blocker block is the one that changes the name when it's disrespected, right?
Yes.
Okay.
Remember,
thank you.
There's a order block and a breaker block. Disrespected order block becomes let me rephrase myself. There's an order block and a breaker block. A disrespected order block becomes a breaker block. So in this case, it was a bearish order block. So because it has been disrespected, it becomes a bullish breaker block. Okay.
Yes, thank you. I understand. Thank you.
So back to what we're doing right here. Levy, do you expect from a bullish order block? Do you expect to experience buying pressure or selling pressure?
Pardon?
From the zone of a bullish breaker block, do you expect buying pressure?
Selling.
Selling. It's called the bullish breaker block. So what do you expect?
Buying pressure.
Yes, buying pressure. It's a bullish breaker block. From
Yes, I have a question.
Okay.
Now, when we have so many terms like this, is it possible to make it easier? Let's say, like, you look at it like a psychological level. You make it easier for yourself.
If you can do that, that's okay.
Okay.
But they're not difficult.
So,
If you rewatch, you notice I've done it very simply. I've simplified the content so much.
okay.
Just try to rewatch it. It's not difficult. But I understand bullies, whatever. That's only
Okay.
difficult. But if you can identify them on the chat, whatever, you don't need to know all this. As long as you can identify that from this one, expect a buying pressure, expect a selling pressure.
Okay.
You can even call them 1-0 and 1-2 if it makes it simpler. Anyway, from this zone, we buying a bullish order breaker block, we buying pressure. So from that zone, you can have an entry from that zone and actually trade that. But remember, this leg right here is the Quasimodo level. This leg is where we are having our Quasimodo level. So the ultimate buy will come from the Quasimodo level. Any POI on the Quasimodo level, any POI on this leg will find being a Quasimodo level. So the ultimate buy will come from that zone and all the way up there like that. So you can have your entry from that zone right here to have the ultimate buy like that, all the way to that down. Let me go to the chart so I can be able to identify these things that we're talking about. These things that we're talking about right here. You can see by this class, the trade is actually, I want to leave this and see if the trade will go all the way to what they predicted. You can see that not yet been stopped out, the trade is actually going down. But let's look at a couple of things. But just to start it off, today we looked at this trade and we had our three confluences. Which is the three confluences that we talk about? In this setup, we don't think Quasimodo level, Quasimodo pattern, stop hand. Which are the three confluences that we looked at before having this setup? Someone? We had three of them. Can you name one slide? Name one.
Accumulation.
What do you call it?
A and B.
A and B, yes.
Accumulation and distribution. Yeah. Accumulation, mitigation, and distribution.
Accumulation, manipulation, and distribution.
Oh, it's manipulation. Okay.
Yes. And you see this, someone to say the distribution. So perfect. On another term, we call it what? We can call it the name looks
A and D.
A week of strategy.
yes, the week of strategy. So that's it. That's confluence.
Or Judas thing. Or Judas thing.
Yes, Judas thing is the
Is it? Oh. Okay.
Yeah, perfect. So that's the first conference. The next conference that we saw in this chart. Levy?
Valley gap.
Yes. Right here. Then the third thing, the third confluence. Someone, the third confluence. Joseph?
Bearish order block.
Yes, the bearish order block. The bearish order block. our fourth confluence within the same setup. So let's look at that. If you look at this part right here, what is this slide actually? Because I want you to answer this question. What do we call this? What can we call this part right here? Let me reduce this name. Let me just call it A. And I move it to the left. No, yeah, the left. And maybe reduce the colors of these ones so that you can see what you're talking about. Perfect. So what is this part?
Which one?
This one. Slide.
That one is a stop hand.
Perfect. A stop hand. You can easily identify that. Raise up your hand.
Because it went beyond resistance.
Great. Let's appreciate slide. The stopper. Stopper. A stopper. Okay, let me see who's on the Christian colors. What is this right here? Christian. Let's see if you've been in class for the past 10 minutes. What's that? Christian, unmute yourself and give it a trial. Trial A, option A. Option A, a break of structure. B, a change of character. Just choose one.
Break of structure.
Break of structure. Christian says break of structure. Someone else? Is a different opinion slide?
It's a change of character because it is a change of.
Because?
Wait, I'm not a change of character because it has changed. It has broken the resistance in the. Wait, I don't know what I'm saying. I don't know because of why.
Yeah, okay.
But because it has changed the direction, it has suddenly changed the direction from. If you look at the other part, it was going
then
up, and then there's accumulations. We're hoping it would continue going up, but then now it's changed. It's going down.
Perfect. Great.
Yeah.
But yeah, slide is correct. It's a change of character. Remember, this was an uptrend. And it defined an uptrend as a change from character, what you call a market perceive. And the point is from being an uptrend to a downtrend, or from being a downtrend to an uptrend. So in this case, it's a change of character. Remember, we said that this term is what we have agreed as in this class. We are going to call this a change of character. Some videos will be calling a break of character, but in this class, we agreed to call that a change of character or a market structure shift. Joy, you have a question?
Yes. How is that a change of character yet the market is kept
Okay.
at that point?
I'll explain to you why. Remember, we're having an uptrend. Can you see this right here? We're having a scenario like this.
Yes.
We're having this. This is what we're having. Then, at a small situation, we had accumulation, then that. So, in real sense, it was an before it even accumulated, it was an uptrend. Right here. You can see that. Before even
Yes.
it was an uptrend. So the most logical thing to assume is that the uptrend will continue. But it broke through that and now it became a downtrend. Can you see that? Can you see the similarities between these what I've done right now and what now?
Yes.
Yes, it was an uptrend before the indecisive period between the past and sellers, then it went down. So we are having our top hand and a change of character. What is the name that we called a combination of a top hand and a change of character? Someone. A combination of a stop and a change of character. Levy.
Quasimodo, what?
Yes.
Yeah, Quasimodo.
Yes, a Quasimodo pattern. But I said, if these terms are too difficult, it's not okay, identify these things on the chart. These names are not that important, but rather, this is called Quasimodo pattern. Quasimodo pattern, a combination of these two, a stop hand and a change of character, is what we call a Quasimodo pattern. Don't have it here, but you can say a Quasimodo pattern. Quasimodo is my cue. Quasimodo pattern right there. So that's our Quasimodo pattern. A combination of a stop hand and a change of character is our Quasimodo pattern. But remember, we said you can have two cells from the zone of the breaker block and from the zone of the Quasimodo level. But where did we say the ultimate cell will come from? Okay, before you even start there, which type of Quasimodo pattern is this? Is it a bullish Quasimodo or is it a bearish Quasimodo? Bullish Quasimodo or a bearish Quasimodo? From what you've done right here, it looks like this one. Let me see. It looks like this one. So is it a bullish Quasimodo? A stopper is up here, it was an uptrend, downtrend, a stopper is right here, the end of character is down here. So is it a bullish Quasimodo or a bearish Quasimodo? Line?
It's a bearish Quasimodo.
So what are we looking for along this one? A bearish Quasimodo, you're correct. So what are we looking for? A long position or a short position? Mula mula?
Short positions.
Yes, short position. Remember, a short position means they are selling and a long position means you're buying. Just in case you don't get that part, a long position means you're buying, a short position means you're selling. So coming back to this, we have identified this is a bearish Quasimodo. We identified our Quasimodo pattern, and now we want to look for this bearish sell or bearish position or short position from this data right here. So what we said, if you can remember from this part, that the ultimate cell will come from what? Did I delete that? Yeah, I actually deleted that. The cell will come from the first cell will come from the bearish breakup block. The ultimate cell will come from what? Will come from the zone of the Quasimodo level. Quasimodo level. And you see the Quasimodo level is any POI that will be on this leg right here. That's our Quasimodo level. So let's come to our chart and look for our Quasimodo level for the ultimate cell. The ultimate cell. So our Quasimodo level at this time, I feel like deleting everything, but I don't want to delete. Let me delete all this. So this is our length. Let me just use a line chart to demonstrate this. So you're having that, our stop hand, and a Quasimodo like that. So if I move this, you'll be able to see that our Quasimodo level is on this leg right here, this leg right here, this leg right here. And if you look at that leg right here, which Quasimodo pattern do we have? I'm just replicating this. Which POI do we have at that juncture? We have not mentioned that before. We have a number. Number one, you're having this, a bearish breaker block on that leg. It coincides on that. If you can see that, thumbs up. If you can see that, our bearish breaker block, the last green candle before a sale, thumbs up. Perfect. But also, we have another POI, a perfect one. Now that this market came into the zone of the bearish order block, but it actually pushed more higher to that zone. What do we have right here? Someone to tell us. We're having a wick. If you can see that wick, thumbs up. If you can see that wick, thumbs up. Perfect. And if I extend if I extend my rectangle like that, you can see it was actually coming to mitigate that wick at that juncture. That wick at that juncture. So that is what we call a Quasimodo pattern or Quasimodo level. Let's look at another example so that we can be able to identify that. Right here we are having, let me delete this, but I wanted us to keep that so you can see what if the market is good for that. Slide, let me have another example before you ask that question. Kindly. Before you have that question, let's have this other example.
Okay.
Okay. We are having an uptrend right here, and we're having a downtrend. So the market has changed its direction from being an uptrend to now a downtrend. So what do we have here in the main slide? Because your hand was up. In the middle, what do we have right now? Slide.
Change of character.
Yes, we're having change of character. From being an uptrend to a downtrend. This name is too big. Let me just use MSS, and reduce this to make it 12. So you're having our market or a change of character. So having a change of character, our stop hand is right here. Our stop hand, if you can see that, that's up. Our stop hand is right here. If you can see that, that's up. Our stop hand is right there. And if you want to see that quite visibly, you can move down to from 1 hour time frame, you can move maybe that minute so that you can see it quite clearly. If you can see that now, thumbs up. Our stop hand right there. You can see a proper stop hand right there. Let me go to my 1 hour, back to my 1 hour. Like that. So you're having our stop hand right there, and our market starts to shift at that jump. So is this a bullish Quasimodo or is this a bearish Quasimodo? Someone. Is it a bullish Quasimodo or is it a bearish Quasimodo pattern?
It's a bearish Quasimodo.
Yes, it's a bearish Quasimodo. Ambrose, what do you expect from a bearish Quasimodo? You look for short position or a long position.
We're looking for short position.
Why?
Well, it's a downtrend, and then if we a bearish Quasimodo, then we expect, we look for a short position.
Yes. Basically, we have seen that first of all, that was exchange because now it's a short position. This is a bearish model. We expect to find a downtrend, and we said always trade, or rather, always trade the trend. So if you find the market is in a downtrend, look for a short position. If you find the market is in an uptrend, look for a long position. In this case, it is in a short position, so we are looking for it is a bearish model, so we are looking for the short position. So let's look at this leg right here and look for our POI, our Quasimodo level, our Quasimodo level. So if you come to this part right here, our Quasimodo level, we are having our last green candle before a significant sell. What do we call that? Last green candle before a sell. Last green candle right here. Remember, this chart looks like this. Let me just illustrate that so that you can get it. Looks like this. Our estate right there, then like that. So if I move this to the left, like this, you'll notice that this is our Quasimodo level, this leg. This leg right here is what you're looking at to find any POI. So, and that's why I highlighted this last green candle before significant sell. Our last green candle before significant sell is what we call what? Someone? Ambrose, I can see your hand is up.
I've just forgotten about it, but
Last green before sell?
in the bearish Bearish what? Something bearish.
Order block or break block.
Order block.
Yes, a bearish order block. A bearish order block like that. A bearish order block. And if you see, the market actually came up to do what? To mitigate that. If you can see that week in the zone of bearish order block, I've highlighted it like that. Is peace in this class? Yes, peace is here. Please have a question. So remember you said you can trade the bottom of this order block, 50% of this order block, or have your entry at the top right here. So let's do that right here. Let's have 50%. Like I always say, myself, I love trading 50%. So pews, if I traded 50% of this bearish order block right there and had my take profit all the way down, maybe all the way down, maybe to this order, another bearish order, bullish order block right here. So if I had that, what do you think happened to my account? My account price was $100. What do you think will happen to my account?
You lose half of your money.
Views. I had my entry at 50% of this bearish break order block, and the market played as it played right here. What do you think happened to my account?
Your entry will not be triggered.
So,
Don't please.
yes, I told you. Who answered?
It's me, Ambrose.
Ambrose. So yeah, you don't lose. Why Ambrose don't lose?
Because your entry was not triggered.
Yes, my entry was not triggered, so I'm not in that trade. And this is a mixed trade. I missed that entry. I missed that entry, so I did not get into that trade. So the amount that I had in my account will still remain to be $100. So, but if I had my entry at the bottom of that order block, use again, what do you think will happen to my trade? Currently, will I be in profit or in losses?
In profits.
Why?
The mark price is lower than the entry price.
Exactly. Remember, this is a short position. So my green zone is my profit zone, my red zone is my loss zone. So I was triggered, but I wasn't stopped out. I was triggered. You can see I was triggered. That sharp week triggered me to that entry zone. So I'm in that trade. My trade was actually activated. It was not a missed one. My trade was activated. Now I'm in profit. I'm in profit right here. So this again, do you think if I exited at this juncture, right here, let me see. If I exit at this juncture and if I exit right here, the current market price, where have I made a lot of money? But A B is this one, let me just name it. A is this one, and B is this one. B. If I exit at the current market price at part A, or if I exit at this price at B, where have I made a more profit than the other?
B.
Why do you think so?
The price is slightly lower
Than A. Are you confident with the answer, people?
Yes, but I don't know if that will reach that place.
Pardon?
I'm not sure if if it reached part B.
It reached.
But because they read a week or
Yes, it's just a week.
so in B you make more profit.
Are you confident with the answer?
Yes, I am.
Yeah, correct. You're actually correct. I'm just messing with you. So in fact, B, you get a lot of profit than part A. So if you manually from part B, then you have made more money than if you exit at part A, which is the current market price right now. I have another question. Again, I have another question. Do you think amount of this trade, I could have made just make a lot of money, but the current market price is at A. So why do you think my profit as of now are laying? Do you think I'm out of this trade or I'm still in this trade? In short, that's what I'm asking. Am I in this trade or am I out of this trade?
Either of the two.
Let's assume I did not manually close this.
Means that you are still in that trade.
Yes, I'm still in that trade because the price they got half me out my profit. Remember my profit is right here. No. This is what I said my take profit. My take profit. Let me name that take profit. My take profit is right there. So the market triggered me, my entry went all the way down. I was maybe sitting in, let's assume maybe 50% profit. So then the market retraced again, meaning now that I'm sitting at maybe 20% profit. So I'll have to wait for me to reap off 100% profit, profit. I'll have to wait for the market to come down that zone right there. Any questions?
Sure.
Mm-hmm.
When you say that stop hunt is caused by traders who influence for the trigger price to occur or to change.
Yeah.
I was wondering who are these? Is it the whales or it is the exchange owners who do this? Because it is influenced by traders other than those who have taken the trades.
Yeah. So let me explain to you. Do you think an exchange is a whale?
There could be insiders. Really, there are those who are there monitoring because they are there to make money, aren't they? They see many traders are opting towards a certain direction or a certain trend, then they can influence the trend to change so that they knock off all the traders from the trade before the trend changes. That's my thinking.
Yes. Let me explain to you, like I actually just explained right here. Market makers. Let's call them market makers instead of
Alright.
let's call them market makers.
Who are they?
Big market makers. Whales, people who have a lot of money. Instead of
Okay.
people who can actually move the market. You know, you can actually also move the market. It's just that the volume that you are having is not enough to move the market. You understand? You can actually become a whale. If you have a lot of capital, you can become a whale. Because your buy, if you click buy, it doesn't have like five bitcoins. If you start right now, do you think it will move the market? Yes, it will actually move the market. You can see a trend in the market. If I'm having 0.00 bitcoins and I sell them, do you think it can move the market?
Nothing.
Yes. So, but basically, this is what I want to explain. Let's assume we are all whales. We are whales. Now, in this situation, we are whales. We know that everyone in this world knows that this is the resistance. Do not think we are the exemptions, but we only know that we are. Don't think we are the exceptions knowing that this is the resistance. Majority, this is the basic of basic skills. Majority of the people, even a newcomer in trading, knows this is the resistance. And I also a newcomer in trading knows this is the support. So what do you think are sitting around the resistance and support zone? Because we all know the resistance is a zone that you don't expect the market to break through like that. Okay? The support don't expect the market to break through like that. So what do you think are sitting around here logically? Because everyone in the market can identify support and resistance. What do you think is sitting how they make money using your money. So let me delete that. You're having a situation like that. You've come into the market, you've analyzed this thing. The one shot, you know, from the resistance zone, the market is supposed to sell. You know that. Very correct. You know that. Because you know resistance, you know support. So you have that. You have the right to use from the resistance zone. I'll have a sale from that zone right there. And then after the will, you know, every trader can see that. So what will we do? We are having the stop losses. And remember, our stop loss is right here. Our stop loss is right here. Our stop loss is at that right there. So they know our stop loss is hanging around the resistance zone. The resistance zone, they're hanging around that zone right there. And they know, or we all know, that if our stop loss is hit, are we losing money? Correct, we are losing money. So, for example, this account is $100. If I hit my stop loss, I will remain in the $90. So I'm going a loss of $10. And if I hit my profit, my account will have about $15. So I've made a profit of $15. So they know these are some $10 around here. So what do? Intentionally, because they have a lot of capital, they can manipulate the market. They intentionally push the price higher to stop us down, and immediately stopping us out, because it actually respects our resistance zone. Our resistance zone is that. Same thing, they know that from the support zone, all traders know that from the support zone, the price is high. So we are having entry from this zone right here. And they take profit all the way to the support zone. So they know there are stop loss orders that are here. Many stop loss orders. And stop loss orders are money. So they intentionally, because they are well and they have big volume, intentionally push the price lower. And immediately they're stopping us out, or rather calculating all that money, that liquidity, goes in our direction like that. So that's what it means.
So basically, the market makers who are actually being destroyed by economy, or they are just yeah, you've answered, but I'm just thinking, well, these guys are, the market is brutal.
No,
They are brutal. You just calling them conmen, not seriously, but just as a way of describing them, but it's just a brutal market.
someone told me this. But I don't know if it was TikTok or a video. And then someone actually this skill somewhere. Someone said if you can easily identify from afar as a POI, any POI, ignore it. And if you don't have any confidence in that POI, just ignore it. Because it means everyone in the market is seeing that. Everyone. And what is really everyone seeing that POI in the market, that means that they can demonstrate that can see that everyone is seeing that, and their stop losses are just hanging around that area. So it will be easy target. So it's more easier your POI is, the more risk you are doing of being stopped out. So unless you identify a POI and have confluence to that POI, then that's a strong POI. And if you cannot identify any POI and you easily find out that POI, kindly leave it alone. You'll be an
Okay, thank you.
Yes, I have. So mine was just wanted to say ask. So for you to identify these confluences, so you advise us to do the drawings like we have been doing, like with the rectangles, right?
Yes.
Okay. Mm-hmm. Yeah. And which is the best hour to do that? 1 hour most likely.
No.
Okay. Mm. Mm. And will you be teaching us more how to use more indicators? Oh, okay. Thank you.
If everything is okay, but rather you want to watch, then you can gather your perfect. So with that, I'll end this class and this chapter. We meet tomorrow.